It's time now to turn our eye to business. Business means Kate Moody. Good evening to you.
Hi, Mark.
The Chinese property giant Evergrande back in the spotlight after a crucial debt deadline passed without payment.
Naughty, isn't it, really? Especially when it's $80 million.
$80 million.
That's what was owed on Monday. That's when a 30-day grace period expired. Creditors said they did not receive payment. Now, Evergrande had warned that was likely, and on Monday its shares plummeted 20% to an all-time low. They did recover slightly, about 1% up, fairly stable on Tuesday. The company, which has a total debt load of around $300 billion, is now said to be taking steps towards a possible restructuring. A smaller real estate firm in China, Kaisa, is also likely to miss a payment. Others in the country have warned of unsustainable debt loads. Well, concerns about Evergrande in September sparked a sharp sell-off on global stock markets. Earlier, I spoke to Danni Hewson of AJ Bell about why the latest developments haven't sparked similar market turmoil.
First and foremost, of course, we've been talking about this for months and a lot of investors have got used to it. The second reason is that yesterday we heard from China's central bank saying that they were going to increase the amount of money that banks were able to lend. They were making sure that there was room for manoeuvre if Evergrande did fail. And that has certainly made international companies feel a lot happier. In fact, what we saw today on the FTSE 100 is miners actually increasing, gaining, because they thought that there is room for prudent growth. That was the word that China's central bank was using, prudent growth. What they don't want is to reward Evergrande, but they don't want to see the country go into some kind of credit crunch, which is why they're taking these steps. And last time we saw the likes of Tesla implode because, of course, they sell a huge number of vehicles into China. And if the consumer is impacted, then that affects the kind of money that they can afford to pay for things like those cars. What we haven't seen today is the same kind of reaction, and that is because we're finally seeing movement from China's central bank.
Well, that brings us to a look at the day's trading action. Wall Street rising for the second day in a row. The tech-heavy NASDAQ outperformed with its best single session since March of this year. Investors and businesses increasingly optimistic that that new Omicron variant of COVID-19 won't throw the recovery too far off track. The major European indices closed sharply higher as well. We saw gains of nearly 3 percentage points for each the Paris CAC 40 and Frankfurt DAX, 1.5% in London. The Carbon Disclosure Project has today released its ranking of sustainability practices at some 12,000 companies around the world. 14 are ranked AAA for their performance on climate change, forests, and water security. They include France's Danone and L'Oréal, as well as the consumer goods conglomerate Unilever. 272 firms are on the A list altogether. They're worth some $12 trillion worldwide. Well, Dexter Galvin from the project told us more about how companies are evaluated.
We look at companies across a variety of factors, so climate change, water and deforestation, as you mentioned, and we really dig into what the targets that these organizations have, the capacity of these organizations to report their data, their level of transparency, what sort of understanding of risk they have, and really what sort of governance structure they have to really take action on these issues.
There's some surprising names on that top list. The tobacco giant Philip Morris, for example, not a company that's usually associated with environmental leadership, but it comes in at number 12.
Yes, so Philip Morris have an A in climate change, water and deforestation, and that's really recognizing their leadership on these issues in their own operations and also critically in their supply chain, because 11.4 times the average company's carbon emissions are actually in their supply chain, and that's actually very significant for deforestation and water security as well. So Philip Morris is not really able to talk about their sustainability initiatives, so it's great in one way because it's absolutely not greenwash. I mean, they're not going to sell more cigarettes because they're taking action on climate change, but they're really doing this, I think, for their business sustainability in the future.
And Mark, we've seen a lot more momentum towards this since the COP26 climate summit calls for the private sector to step up, both in terms of transparency and action.
Kate, as ever, fascinating stuff. Thank you very much indeed, Kate Moody, with all the business.